Okay then folks, so you've done two simple ones now. Now we're going to have a look at a more complicated one, and we're going to do two more complicated ones together so that you can see how selling to each other affects things both ways. Okay, so this question here, we've got JPLC acquires 90% of the share capital of Silent Bob on the 1st of April 2011. Extracts from the P&L are below. So as you can see, folks, we've got revenue minus cost of sales equals gross profit. Then we've got this other line called other income, dividend from Silent Bob. Okay, so that's something we're going to have to look out for. Distribution costs and admin costs, profit before tax, income tax expense, profit for the year. Okay, so looking down that P&L, the only thing that was a little bit irregular that we need to remember is this other income. Then we've been told during the year, Silent Bob sold goods which had cost $80,000 to JPLC for $480,000. So can you see they made a profit of £400,000 on that transaction? 25% of these goods remain in inventory still at the end of the year. Okay, draft the consolidated P&L. Right, so let's go and do our four things that we need to think about. So, working one is group structure. So we already know that we own 90% of the company, which means we have a 10% NCI. Number two, do we have any intercompany transactions? Yes, we've got a set. They've sold £480,000 worth of goods. Now think about this, folks. One company has sold £480,000 worth of goods, which means the other company has purchased £480,000 worth of goods. So we need to adjust in one company that they've sold 480 and in the other company that they've bought 480. Number three, is there any unrealised profit? Well, there was £400,000 profit made for the transaction and 25% of that is still in inventory. So there is unrealised profit of £100,000. So we've got a PERP adjustment of 100,000, but what's really important is who sold to who made the profit. Silent Bob sold goods to JPLC, so the subsidiary sold to the parent. So let's make a note of that. Sub sold to parent. Okay. Right, and then working for, we're going to come back to when we do our bottom bit of our P&L. So that's your three things to think about as we now go in to do our consolidated P&L. Okay, so what I've done, folks, is I've written out this P&L, all the titles, on my scrap piece of paper here. I've even put the other income line in because whilst we're learning this, I want us to think about why we're including things or we're not including things. Okay. So, revenue, what we did last time is picked up both figures and added them together. So, let's do that. So, 140,800 plus the 59,000. Okay. However, we've said that one company sold 480,000 to the other company. So we need to remove that out of the sales. So we're going to be doing minus 480. We're reducing the sales by 480 because you can't sell to yourself. So therefore, our revenue is now 199,320. Cost of sales then. So last time we took our cost of sales, so the 100, 300 plus the 38,000. So let's start off with that. So 100, 300 plus the 38,000. Okay. One company sold 480, the other company bought 480. So in one company, they've got purchases of 480. So we need to remove that. So can you see we've removed both sides of this transaction? One company bought 480, one company sold it, and we've removed it. The other thing, though, that we need to do with the cost of sales is to adjust for this £100,000 profit that's sat in closing inventory. Now, if you think cost of sales, we do opening inventory plus purchases minus closing inventory. So we need to add this 100 back to cost of sales, because if we were to minus it, we'd be making closing inventory bigger. So we need to add 100. That's going to give us 137,920. Giving me a gross profit then of 61,400. Okay. Next line then is other income, dividend from Silent Bob. So in the parents' P&L, they've got £4,000 worth of dividends that they've received from Silent Bob, which is absolutely fine when they're doing their own P&L. But remember, the whole thing of this is that we're joining these two companies together. So you can't pay yourself a dividend. So therefore, that other income line does not exist now. It is zero because there is no other income from outside the group, from outside the consolidation. Okay, the only other lines then that we've got are distribution and tax, and there's no adjustments to them. So we're quite simply going to add them together. So distribution costs minus 15,500 to give me a profit before tax of 45,900. Tax of 11,000 to give me a profit for the year of 34,900. Okay, so we now know that as a group we have a profit of 34,900, and we now know that our next task is we've got to split that between the parent and the non-controlling interest. So what we can do straight away is put that 34,900 into the bottom box here, because that's how much we're sharing out. Now, being honest with you folks, I always tend to, when you've got a more complicated example like this one, I tend to calculate the NCI and then do the parent as a balancing figure. Okay, so this now takes us to our working for, which is where we're going to work out our profit share. And I've said that I'm going to calculate what the NCI is due. Okay. So, if you look at your subsidiary has made a profit of 15,000. So, sub-profit £15,000. We have said that £100,000 of that profit was not real because look, it was the subsidiary sold to the parent, so it was the subsidiary who made the profit. So therefore, I am going to take £100 out of that profit to now mean they've made a profit of 14,900. How much of that belongs to the NCI? 10%, which gives you 1490. And that's from the perp adjustment, the 100. Okay. So if I now come back to my attributable, I've said that the NCI is entitled to 1490, which means the balancing figure for the parent is 33,410. And just like that, folks, it's done. Okay, what I would like you to do now is I would like you to get the next question, which is Perch and Scat Limited. I would like you to work out your 1, 2 and 3 for Scat and Perch. And then on the next video, we're going to go through it because this one is slightly different, which hopefully you'll realise when you're doing your working 3. See you in a moment.